I had a buy.
Okay.
Okay.
So,
I had a buyer get under contract with a sale and settlement contingency,
right,
an inspection contingency,
Yeah.
an appraisal contingency,
Right.
and closing costs.
exactly.
On a home that was beautiful, 2 years old, 440 in Marietta.
Actually, back,
Yeah,
we have, I think, two of the ones we got over this weekend were had inspections, so.
it's awesome. I think that's a good.
I think it's good. I moving in the right direction, I feel, so.
Yeah.
Without further ado, everyone here knows me. I'm Chris. I'm with Fairway Mortgage. But I have a special guest here today, and my special guest is Mark Knodel. He's with us here at Fairway, but he has a niche. He has a very unique product that you all heard me talk about before. However, Mark is the expert. If you want the answers that are 100% right, Mark's your guy. So, yes, it's a lot of pressure right now, but Mark's been doing reverses for quite a number of years. He's been with Fairway for a few years. I'm gonna pass it off to him. He's gonna talk to you. I'm gonna be his slideshow guy today, so I'm gonna be doing slides for him when he says if he points at me. I'm gonna read the slide, but Mark's gonna be here to give you an education on a very unique product called a reverse mortgage, or HECM, as we call them. And Mark, I'll let Mark talk to you all about that so you understand. If you want to see, the only screen I can get to go is this one here. So can you see it okay, Chris?
Yeah.
As long as you can see it, it's over here. So without further ado, Mark Knodel.
Okay.
All right. All right. Thanks,
Well,
guys.
good to be with you. As I pulled up and walked into the office, I was reminded of a time I was here. It was about, I think, 3 years ago that I came to the office for the very first time. So this is my second time here. But there was a signing that was taking place in one of the conference rooms. And Abby Nar was the real estate agent. She was at Keller Williams up in Lancaster, but we were helping a couple that had moved from Florida, purchased in Harrisburg, and they were using the HECM or the H4P loan and stuff. So that was the closing here. So good memory. So
Welcome back.
yeah, good to be here and stuff. And Chris speaks highly of this office and the agents and stuff. So I don't know how many of you are familiar with the home equity conversion mortgage for purchase. It's also called an H4P, but I've got all kinds of handouts and information that I can send you, and that I'll have for you, that for those that want to know more. But hopefully, and I believe that as you learn more about how this loan product is a special niche, that it will get you more listings. You'll be able to close some loans that maybe you or close some purchases that you may have missed opportunities on. So retirement, I'm reading some books right now on retirement. This is called Rewirement by Jamie Hopkins. Another one is by Wade Pfau, and they're both out of Hinga, Prussia. There's a school there, American College of Finance, I think. But they are proponents of using the reverse mortgage in retirement as part of their retirement strategy, overall retirement strategy. And how many of you, if I was to say reverse mortgages or the HECM, probably have a negative response like, oh, I've heard bad things about those. And that's pretty common. Or there's some stigma about reverse mortgages. So hopefully I'll dispel some of the stigma. And we'll talk about how the retirement mortgage is really a game changer in retirement. I've got an article here about a new look at retirement cash flow. And that's what they talk about in retirement. Cash flow is so important. Have a guide for homeowners or for home buyers that I can send you a digital copy if you'd like. I have some hard copies also, but if you want digital copies, I'll send those to you. So I believe that this will help you get more listings, showing how senior homeowners can either sell or buy. And I'll give you a few scenarios of people that I've worked with that have purchased homes and how it was able to help them. And hopefully you'll get some ideas from that. As I was out in the lobby, I saw this quote on the wall as I was snooping around, and I had to write it down. It was by Wayne Dyer. He says, if you believe it will work, you'll see opportunities. If you believe it won't, you'll see obstacles. And what that reminded me of is what they call that, the reticular activating system. You know, once you're made aware of something, then it's like, oh, you start seeing it everywhere. And I believe that will happen with the H4P or the reverse mortgage for purchase. I think once you're become more aware of how it works, that you're going to see opportunities that you didn't see before in order that will help you close more purchases or get more listings. So how many of you have actually closed a transaction? Either you had the listing and the seller had a reverse mortgage, or you were helping the buyer and they were using a reverse mortgage to purchase? Any of you? You have? Okay. Was it the seller that had a reverse mortgage that had to be paid off? Or it was the
Buyer.
okay, the buyer? Okay. I've got many calls, a handful of calls. Probably, I don't want to exaggerate. From real estate agents that have said, hey, I've got a new listing. Sometimes it's the children have the estate, the parents they passed away and they had a reverse mortgage and they don't know what to do. So I will guide them through how to get a payoff, how it works and that. And I've also had agents call and say, you know, I've got a purchase agreement. They're using the H4P, the reverse mortgage. I'm not familiar with it and stuff, so I can educate them and just discuss with them. I'll tell you a story about that a little bit later, but the reverse mortgage is a game changer. So why focus on this? It's because over 13 trillion in equity, 15 million people are turning 62 every I forget how many years it is, but there's people, I think it's 10,000 a day that are turning 62. And it is the largest asset class, the baby boomers. So that's, you'll see more and more of these reasons for moving in retirement. My wife and I, we actually moved from Washington State. We moved to Pennsylvania about 4 years ago. I was working with Fairway in Washington State, but I have adult children that moved here like 8 years ago. And then one of them started a family, so wanted to be around them and the timing just was right. So we moved here to Pennsylvania and we love it here. It's home for us. But I don't know if you work with people relocating to Pennsylvania. Pennsylvania is a great state for, they don't tax your pension if you have a pension. So it's very friendly for retirement for people moving here. But reasons for people wanting to move or in retirement, be closer to family, wanting to reduce home expenses, change in health status, change in marital status. This can be helpful too. Sometimes attorneys, I've spoke with attorneys before, and they'll use the reverse mortgage in a divorce situation. Maybe they call it the gray divorce or silver divorce. It's where it's a couple that's lived together for a long time, been married, but now they're divorcing. They've got significant assets. One wants to remain in the home. One wants to move out, so they've used the reverse mortgage to buy the other person out so they can remain in the home. Or they've sold it and then each of them have purchased properties using the reverse mortgage. And but that's an interesting one. Empty nesting, children moving out, wanting cash from sale of prior home. So How about the next slide here? All right. They're on the move. They're I think the largest percentage of people buying homes right now is the baby boomers. And, are you seeing that? Okay, I don't know if I'm making that up. That's why I've heard that stat. You guys are no better than me, but, I believe that is true. And, one of the reasons that they may be using a reverse mortgage is to downsize their home. They've outgrown it, kids are, and it's too much upkeep, so they'll be moving to save expenses that way. There's a number of people that actually, they'll actually upsize or right size. They're actually buying a home that's maybe bigger than the one that they've had, but it's a better layout for them in retirement. And this is typically used by somebody that wants to age in place. Some of the benefits of a reverse mortgage. They don't anticipate moving again. A large percentage of this is like their last move. Okay, how about the next slide there, Chris? Okay, so the advantage of the H4P is you do come in with a large down payment, and it's based on the value of the home or the purchase price or appraised value, the age of the youngest borrower, and then what current interest rates are. That determines how much of a loan you can get. Okay. The advantage of it is that you never have to make a mortgage payment again. There's no mortgage payment for as long as you're in that home. You can live, the paperwork for Pennsylvania says when you turn 150, you have to start making payments. So nobody has done that yet. So you could do, you could literally live in your home. I helped a woman who already owned her home, but she was 98 and her son got a hold of me. They were trying to help her. They wanted her to move into one of the children's home, take care of mom, but she wanted to stay in her own home, but her health was failing. She had fallen a couple times, go to the hospital, come back home, and she just insisted she wanted to stay in her home and just age there. So they got the mortgage. There's, they have a family history of people living to be 103, 104, and they expected that she'd continue living. So she got a reverse mortgage so she could age in place. But many times that's what people just want to age in place in their home. So she had no mortgage payment. She was able to use equity out of her home, and that paid for having home health care come in and take care of her, where she just needed more health care coming in.
So the down payment is what, based on the appraised value?
Yeah, it would be the appraised value or the purchase price, whichever is less. Okay, and then age of the youngest borrower. So at least
If
one
they're
of
not
the,
making a purchase, they just want to age in place, then an appraisal has to be conducted in order to come up with that number.
correct, yep. So there'll be an appraisal that will be required. And you can have just one homeowner. If it's a couple, only one has to be 62 or older. Sometimes a spouse will be younger, but they can still qualify as long as one is at least 62. So, did answer your question?
Yes.
Okay. Current interest rates right now are like 5.75. It is an FHA loan. So here's an example of this is a not one of my personal ones, but Cindy, who's 70, this is a typical scenario for somebody that uses a reverse mortgage to purchase. Is she's downsizing, she's selling a property, she's going to take the proceeds from that property and then buy a less expensive home, and then with money that she from the proceeds of the sale, she wanted to set up an annuity for her grandchildren. So in this example, she nets after selling her home and purchasing with a reverse mortgage, she still had $120,000 from her sale, and then she took that and bought an annuity for, I think, $100,000. And then that set her for her grandchildren. But she's in a home where she can age in place. She never has a mortgage payment to make. You do have to pay your property taxes and homeowners insurance, just like if you own your house outright, you still have to make your payments, right, for property taxes and homeowners insurance. So here's the example of her situation. So that's a downsizing situation. And let the next slide. So this one,
moved on with it. There we go.
so this is upsizing, so. And one of the benefits of a reverse mortgage is it will increase a person's buying power. Because typically in retirement, they may be on a fixed income, social security, pension, maybe they're, have a 401k, some type of an IRA, and they have the, mandatory distributions, but they can have their sources of income, but they're kind of set. So one thing that a reverse mortgage will do is eliminate any payment. This guy that I told you about that signed here, he was living in Florida. He was trying to get approved for a conventional loan, but his income wasn't enough. The debt to income ratios were way out of whack and stuff. So they got a hold of Fairway, and the agent says, have you ever considered getting a reverse mortgage? And we got connected. So they were able to purchase a home using the reverse mortgage, where they couldn't qualify with the conventional. So it increased their buying power. So upsizing, so he's selling a home. And they're taking the proceeds from the sale, purchasing a $600,000 home, and then still not having a mortgage payment. They're coming in with a sizable down payment, right? But they never have to make a mortgage payment for as long as they live in that home. But they have to continue paying property taxes and homeowners insurance. And then they can age in place there. And I'm in one of these books, this is the Rewirement, and also in the Wade Pfau book, the retirement financial planners more and more are recommending the reverse mortgage in retirement as part of their overall strategy. And they've run these Monte Carlo simulations that prove that if you use your reverse mortgage, it extends your legacy wealth that you leave behind, that you actually leave more behind utilizing the reverse mortgage in your financial planning than if you don't use it and stuff. So it's really one of the stigmas about reverse mortgages is a common one is, well, doesn't the bank own your home now? I don't know if you've heard that or not. You always are your name's always on the deed, the bank doesn't own it, you're always the owner. It's funny, because just the other day I got a call from a friend of mine who I know through church and stuff, and he calls me up and says, hey, my neighbor just fell, and I don't think she's gonna be moving back into her home. They have a reverse mortgage. Doesn't the bank own that? And I said, no, she owns it, and you can stay in there. And they go, oh, they were trying to get a head start on it. They really like that house. They have somebody in mind, but so you're always the homeowner. They're always on deed, their title. It's always in their name.
Can I ask a question or two about
Sure.
this? A little confused. So like, you're basically, they would get a reverse mortgage on the property that they're selling. They're not utilizing a reverse mortgage on the property that they already own.
Well, so I may have confused, we're talking about two different scenarios, so. When you're using the reverse mortgage H for P or the HECM. You can use it to purchase a loan. So typically, they're selling a home. They're taking proceeds from that loan and then they're purchasing using the reverse mortgage. And they're just coming in with a large down payment. And it's typically coming from the proceeds of their sale. Does that answer it?
I don't. I guess a couple of things, like to get this, my head wrapped around it. So when you get a reverse mortgage, right?
Yep.
Typical scenario is, I'll just say, typical scenario is you're retired, you are maybe having some problem making your financial means. Now you're like, well, you know what, I'll get a reverse mortgage. It'll cut out that mortgage payment that I'm now making.
Yeah.
And I can stay in my home and not have to make a payment.
Right.
Right,
Yeah.
but you can also go with the idea of, I own a home now, but I really wanna upsize or downsize.
Yeah.
I'm gonna purchase that home utilizing a home equity conversion loan.
Yeah.
And my proceeds to make that purchase.
Right.
And when they do that, then, as far as their down payment and everything, that's all gonna be based on whatever that home appraises at.
Right.
And
And
what
if
the
they're
sale
paying
price-
off a mortgage for the home they're selling, so whatever remains, the proceeds, net proceeds, and that,
So are they still operating off so are you still operating off the equity that they had in their old house? On the new one with that reverse mortgage, cause you have to have equity, right? I mean,
well, typically, yeah, they're gonna have to have equity in the home that they're selling. Because that's where the proceeds are coming from.
right, but you're using those proceeds then to prove equity in the home they just purchased.
Yep.
Which is gonna make that amount vary, right? I mean,
Right. Yep.
and you'll be able to calculate that out prior to the. to
Yep,
the-
we get them all proved and, run scenarios. I always look at their income. There is a financial assessment that they have to pass. And it's just proof that from their income that they can afford their property taxes and homeowners insurance, and then if there's a car payment, that shows up on the credit report.
So going back to the one example with the house they sold was for something, and then the house they bought was 600.
Yeah.
So they put the full 400 and something on the new house for 600, but then don't have a monthly payment.
Right.
So where is that extra money coming? Just the equity as they continue to stay there, not paying, because then
Right, so they've got equity in their home that they just purchased. Right? They're coming in with a large down payment, so they're instantly have 421,000 in equity.
So that equity essentially makes their payment for them. That's the way I like to explain it. So essentially what's happening is, as time goes on, they don't make a mortgage payment, they don't write a check. The check gets written out of the equity, so that 427,000 they have in equity goes down
Okay.
every year, meaning they owe more every year.
So they technically still own it. So say down the road, 5 years down the road, they decide that they wanted to move and downsize, or they wanted to, something happens. Now, does that get then put into the family? They have it in the will, like in that way, and then they would just take that owner, or sell it, and then just get whatever the proceeds would be.
Yep. So the rule is that the loan, when the last person leaves the home, then the loan becomes due, whatever they borrowed and interest that's accrued becomes due. So typically it's repaid, either a family member wants the home and buys it, or refinances it, or they sell the property. And then the proceeds from the sale pay off the mortgage, and what remains goes to the estate or the homeowners. And my experience has been that most children don't want the home. By the time the parents are ready to move out or pass away, that the children got their own, they're in their fifties, forties, or whatever, or older, and they've got their own homes, so they don't want stuff, so.
So just a question.
Yeah.
Just correct me if I'm wrong. I just, somehow in my mind, someone takes out insurance policy. Does the lender take out an insurance policy on the life of the buyers? Or who have the reverse mortgage?
So there is a mortgage insurance premium if it's an FHA insured loan. So there is a mortgage insurance premium that's paid at part of the closing costs. But that insurance protects the homeowner so that you can never be upside down. It's considered a non-recourse loan. Traditionally, home values keep going up, so there's appreciation. Even if they're not making payments, you can make payments if you want to, but you're not required to. But with home appreciation, we run amortization schedules and just shows, hey, after 10 years, if you don't make any payments, and then we estimate, what home values might do, whether it's 2% or 3% increase, and then just showing what the equity is. But so that's the only insurance. So if there was ever a downturn in the market, like in 2008 or 2009, where somebody, I don't know what it was like here, but in Washington State, there was a lot of people that, that just bailed on their homes because the values dropped below what they owed more than what they owed. So that can never happen with a reverse mortgage.
But with a reverse mortgage, the family, if they decided that this was a home that they wanted.
Yeah.
They could have the owners, the parents.
Yep.
Get a life insurance policy that would
Yes.
take care of that.
Yes.
Remain down.
And that's financial planners will recommend that you get a life insurance policy.
Pay off that.
Yeah.
And the other thing is, can you get this reverse mortgage in a trust?
Yes, you can.
Okay, so that it would never have to go through probate?
Correct.
Okay.
So if somebody is going to have the home in a trust, we always ask for a copy of the trust,
Yeah.
and it has to be reviewed by our attorneys and all that, just to make sure that when it's vested, that it's well done properly.
And so, but as I recall, when we did this, Chris, a few years ago, like the home buyers who were getting the reverse mortgage had to go through a training program in order to qualify.
So I'm glad you asked that. There is one of the requirements is there is a HUD counseling session that's required before they can get the reverse mortgage. And that's one of the safety features that they put in a few years ago, that they wanted to make sure that some salesperson wasn't trying to coerce somebody or put them in a loan that really wasn't the right loan for them. And so the HUD counseling is a third party, and it's just kind of a review to make sure that they understand that they're getting a mortgage. It is a loan. It does have to be repaid at some point, but just making sure that they understand the basics of it. So that's probably the HUD counseling that you're referring to.
Right.
So what happens in the situation where the homeowner owns the house outright?
Yep.
But they think they want to get a home equity conversion loan in order to actually get paid some money, right? You do that
Yeah.
as well, right?
Correct. So that's another one that's probably used more often that way than for purchases, but
Is that further?
I didn't really put that in here because I wanted to focus mostly on purchases because we're all trying to make more sales and stuff. But for somebody that does own their home outright, like you said, and they want to remain in that home, then a reverse mortgage can be ideal for them because you can set it up where you have monthly payments. It's like a line of credit, or you can set it up where you get 10-year payments, almost like an annuity, but it's not an annuity. But You can have payments that will come to you. A lot of people, I've had clients that got a reverse mortgage to replace a roof, it was an expense that they were gonna spend $30,000. They didn't want to pull it out of an IRA where they'd be taxed on it. And so as things like that, a lot of times they're trying to make their home safer. Maybe they're redoing the bathroom, so that'll make the shower more accessible, so they're not falling, because that's one of the biggest concerns as you age is falling. It changes your life, right? So that's many times that's a good option. And you mentioned something before about sometimes people have one of the stigma is that it's like a loan of last resort. And I remember helping this guy in Lancaster. He felt bad about getting a reverse mortgage. And I said, he owned his place outright, but he just didn't have a lot of other sources of savings and stuff. And I said, no, man, you've done well. Most people don't have their place paid off, and stuff. So you're doing well. But I could tell that it was almost that stigma of, oh man, I have to do this. So it doesn't have to be a loan of last resort. It can be, but if you use it earlier, I've had a couple of clients, homeowners, their financial planners told them to get a reverse mortgage when they turned 62. They didn't need it now, but they said, get it now because there's a line of credit that comes with it. And most of these guys either own their house outright or had a very small mortgage. So they get the reverse mortgage, they have a line of credit that's available to them whenever they want it. The unused portion of that line of credit continues to grow. So if they don't use it for 10 years, that line of credit continues to grow. It can't be taken away like a traditional HELOC. Have you ever had a client where they had a home equity line of credit, the bank froze it or shut it down? Maybe that's happened to you before. It was happening a lot in 2008, 2009. But with the reverse mortgage, it's insured. It can never be closed on you. Even if home values would drop, you could actually, in theory, spend more than what your home is worth. And at the end of it, it's just, you call it a wash. Okay, so here's some of the basics. 62 or older. Tommy, are you timing me? I did a presentation the other.
25 minutes, no pressure.
I heard this, a guy talking about talks that a good talk should be like a woman's dress. Long enough to cover the subject, short enough to keep it interesting. And stuff. So I try to keep that in mind. So you have to be 62 or older, at least one of the borrowers. It has to be an FHA, when the appraisal's done, it has to meet the FHA requirements. Typically the problems I've run into are handrail, if it's missing a handrail, if there's a deck and it's a certain height off of the ground, there has to be a handrail, but
Regular FHA, just remember. if it's a-
exactly.
If you've done a regular FHA loan, same rules apply here.
Yeah.
Identical.
So, you can, must live in the home for 6 months out of the year. So if you're a snowbird, that can be, I've had, some people get a reverse mortgage on it has to be your primary residence is another thing, but you could actually pull funds out of the home that you own and purchase a second home or something like that. Optional payments. You can make payments if you want to, but they're not required. Here's an interesting fact, or at least I think it's interesting. So let's say you, over the course of, you come into some extra cash and you want to pay $5,000 towards your reverse mortgage. Okay, it's just extra money. So you make that payment. Well, that increases your line of credit by $5,000. If you decide a year from now, you want that 5,000, now you need it. That you can go back, you still have access to it. So it's dollar for dollar. If you make a payment, it's dollar for dollar that it increases your line of credit, plus that line of credit's growing. So just an interesting side note. Minimal credit and income. I had a guy with a below 580 credit score that qualified for a reverse mortgage and stuff. And so it's, you know, credit does play a factor, but it's not like, your typical loan where you have to have at least a 620 or 580, 620, 660 or whatever. So the type of properties, 1 to 4 unit, can do manufactured homes as long as it's built after June of 1976. Condos can be a little tricky. They have to be FHA approved. If they are not, we have a really good, Fairway has a great condo approval team and stuff. So if the condo can get approved, our company or Haley, I think she can get it done.
They call it spot approval.
Yeah.
So we can do those in 30 days.
Townhouses, properties held in a living trust. Nope. Except in Texas. They're always the exception, Texas. So what else we got here, Chris? I think we're getting close to the end. So a couple of ways, purchase 55 plus, increase purchase power and flexibility. No monthly payments, move closer to family, but maybe better weather. We can close in as little as 17 days with the right preparation, you know, where that homeowner does their counseling, they've got that counseling certificate. I've gathered all their income docs. We can close. We need to, as long as the appraisal doesn't take that long. Stuff. And most of the loans I've closed for purchases, they've all closed within, you know, 30 days. I remember helping this guy. He was moving from New York and he was in contract or had made an offer in a home in New York. He was selling his home, and New York is an attorney state, right? And yeah. So anyhow, I get a call from Landon Coronado. He was the real estate agent representing the buyer. And the buyer was using a reverse mortgage. And they'd made an offer, and the agent that was the listing agent didn't feel comfortable accepting that offer because she didn't know about reverse mortgage. So Landon calls me and says, can you talk to this real estate agent and tell her about reverse mortgages and stuff? And so I talked to her, explained that we'll be able to close, you know, and all this, and sure enough, we did. But the guy was pre-approved with somebody else, a different company, for the reverse mortgage. And when I told the client we'd be able to close in less than 30 days, well, they were telling me it's going to take at least 45 days. I said, no, not with Fairway, you know, because we really do have a really good team of processors, underwriters, you know, so it's all our own in-house, so we control that.
I just, on one of your other slides, you don't have to go back, but it said that you would reverse mortgage on a PUD.
Yep.
So do they have to?
Planned
have a
unit
land-
development,
What is that?
planned unit development. Sometimes homes are in a
A townhouse, that's part of a homeowners association, not a condo.
Okay,
So if it's just a PUD, very easier than condos, because condos have to go through an approval process with that.
Right, yeah.
So we include those in-house, we have a like desk that does that, so they're.
how would you know if it was a PUD versus a,
Well, sometimes that's tricky.
yeah,
Sometimes you have to look at the declaration.
okay,
There is a declaration that comes with a condo or a PUD that tells you if it's a PUD or a condo. A good sign would be what's covered. like me, what the HOA takes care of, if the HOA takes care of the exterior maintenance of the home.
It's a condo.
Siding, normally that's a condo.
Okay,
99 times out of 100, that's a condo. If they don't take care of the outside of the home, normally it's a PUD.
okay,
Not always though, so you,
I know.
so we've gone down that road 1,000 times. We kind of know what to look for. If you ever have questions, I bet we'll help you.
Okay, yeah, I just was curious.
Yeah,
Is there a website you can jump on to look up if it's an approved condo association?
FHA is easy. I think you just Google, FHA approved condos, you'll find it. If you can't find it, I'll send you a link. I mean, yeah, super easy to find.
I got burned by that once. We'll never do that again.
HUD or FHA and VA and USDA.
Yeah.
VA has their own approval, HUD has their own, and USDA is kind of unique, it'll go, if it's on VA or FHA, it will take it, so.
Yep.
So.
A good loan originator will catch that early.
I was on the listings out in Oakmont, and there's like 5 different condo associations out there, and I looked at sale history and saw FHA deals go through. So I just made the assumption that, oh, it's FHA approved, and then I got burned on the list, yeah.
Dana,
A while ago.
you know, she catches that stuff all the time.
That's great.
Use my seat.
So here's one thing that I think there's a lot of opportunities out there for the reverse mortgage to gain clients. So even if, you know, if you're dealing with 30 and 40 years old, they're buying a home, they've got parents or grandparents that may be looking to move closer or further away, depending on the family relationship. But anyhow, it's worth asking some questions, and I think there'll be opportunities there, much like, you know, when you become aware of the reverse mortgage and you're starting to look for it, you'll start seeing some opportunities that maybe you didn't see before. And then I want to make, I'm not sure, is there another slide? Why Fairway? It's because we're good, you know, and all this, and you work with Chris. But Fairway, it really does have a great reverse mortgage department when it comes to underwriting, processing. The training is really excellent. For smart stuff. So I would like to be a resource for you. So if you ever have any questions, you know, feel free to call me or Chris. If you think you have a potential client, one of the ways that I like to do is let you and I talk first. And then if it looks like it might be a potential fit for one of your buyers or sellers, then we could discuss, if it looks like it will fit, then we can discuss strategy and how to present it and stuff. Because I know that there is a stigma about the reverse mortgage, but once somebody takes time to educate themselves, get some education, it takes away the stigma. It's really a life-changing one. For
Can you
many of the
refinance into that? Can you refinance into a
Yeah.
reverse mortgage?
Yep, so you can refinance into a reverse mortgage also. Because I've had somebody that purchased a home that wouldn't qualify because it needed a bunch of upgrades and just repairs, you know, it was a fixer upper. And it wouldn't pass an FHA thing. So they purchased, they put in money, they paid cash, put in money, fixed it up, and then got a reverse mortgage.
Do you have a handout that might be useful for us as agents as we approach homeowners to just be like, hey, have you considered a reverse mortgage and what it can do for you? That we just give some basic, how the plan lays out and that kind of.
Can I?
We'll get a list. I'm gonna have everybody sign. Yeah, thank you. And we'll get these slides out to everybody, and we'll get you a reverse, like a plot, you know, that you guys can count on for that. And you can use it as a reference, but don't. I wouldn't advise trying to explain this to a customer buyer, all right? It's hard enough for us. I've been doing this almost 30 years, and it's hard to get the concept in your head. There's a forward mortgage and there's a reverse mortgage, even though they do work differently. One works in reverse, one works forward, right? The concept's kind of unique. So I would not try to explain this to a borrower. Just what you want to understand is
For you, it's not that much different than a regular mortgage, right? You're selling the home, they're buying it, right? For you, it's the same, aside from just a couple little tweaks that we need to know. So we can coach your client on what their down payment is. You know, Mark was helping me with with a buyer that was looking to do a forward mortgage, a regular mortgage. And we were looking at a reverse, right? Because they have a house to sell, they've got a decent amount of equity there, not enough, they're fairly young. So they didn't have enough equity in that home to really make the reverse mortgage make sense. If you tried to explain that to them, nightmare, right? Mark had given me the guidance and me explaining it to them was very simple, right? Because that's our job, right? It's like, I'm not gonna go over how to sell a house. It's your, right? So that makes sense. Be cautious when you bring it up. Just say, hey, I got this idea. I want to talk to Chris and Mark about it. You know, you can always start with me and I can give it to Mark because that's what I'm gonna do anyway. Right? So, and we can always make sure that you guys have somebody to talk to about it. Okay? You know, because if you try to do it on your own, I think it'll be a disaster.
Some people refer to it as a retirement loan. One company calls it a lifestyle loan in retirement. So they put different names on, but they're all reverse
But what
mortgage.
we can do is we can make it understandable to the consumer instead of trying to make you an expert to explain it to a consumer. We know what consumers think like in terms of numbers, right? We can put ourselves in their shoes and we can say, okay, this is a retirement mortgage, kind of works in reverse. But let me explain to you what that means, right? And we can show them on paper, we can show them on an amortization chart, like what their HELOC's gonna look like. We have a resource, Mark has a resource for that, and it was called Quantum, something, Quantum Reverse, whatever, it doesn't matter. We have a resource to help us help your clients. Okay, so thank you.
I typically, if they're local within 3 hours of driving distance, I'll typically meet with the client or Zoom if they're comfortable with Zoom. They're a ways away, but I've driven up to Jim Ford. Nice motorcycle ride up there on a beautiful day. I've been up there a few times. Downtown Philadelphia. Center City, right? Not city center.
Center City.
I called it center.
Center City.
I think so.
Yeah. And stuff. It's not Lancaster, it's Lancaster.
Lancaster.
I still get corrected on these things, but
Yeah.
no, I'd love to be able to be a resource for you, and if there's anything that comes up.
Any additional questions for Mark or for myself?
I have a question.
Sure.
I have a client that I think actually could benefit from this. I just sold her house. She's purchasing a double wide.
Okay.
It is on leased land. She's already got her financing in place and this has been an absolute nightmare, so I'm not gonna rock the boat.
Yeah.
But would this be something that they could refinance into in 6 months?
Yep.
To a year?
Yep.
Do you have some information that I can take with me?
That's fine. Depends on how the mobile home is leased, how that's set up.
Okay,
Okay, if it's like, right.
they don't own the land, they own the mobile home.
If it's probably not.
Okay.
Is it in a park?
It's not in a park,
So
it's
it
it's
kind
on
of,
leased land, but it's a private leased
so
land.
if it's a leasehold, maybe. If it's a lease in a park. or
No, it's not a park.
Okay, so that might be something that we can take a look at. It
That'd
might,
be
it's
great.
gonna be a little deeper conversation than just
Yeah.
yes or no.
Okay.
Okay, because.
Yeah, we're
if it's
putting a
on-
lot of money down, we're putting $110,000 on a $154,000 home,
Yeah.
so.
So if it's on a permanent foundation, post 1976, June 15th, 1976, that's doable, right? Leasehold, maybe not, a little bit deeper
Okay.
dive for that. Okay. And I don't want to make a promise we can't keep.
Yeah, exactly, but yeah, if I could present them with something,
Yeah, of course.
That'd
Yeah,
be even
Mark will
better.
give us- Mark will give you some information on that. You have something to give her.
Yeah.
that's
And-
awesome.
And then we can, if not, I can get you something offline. Okay.
Yep.
Because we have plenty of material. And if it's really watered down for the consumer, right?
Right,
Very
right.
basic information because we don't want them to get lost in the weeds and
And
they trying to figure it out because it can get.
Donna would be in the weeds,
Even in a regular loan, you can get lost.
great? Awesome.
Great job, Mark.
Well, that would be
Any
good.
any more questions for Mark? Anybody else?
Thank you.
Thank you very much. Thank you. That's great.
I'm a little envious of your hair. I used to have hair like that many years ago.
Back in the day, when you drove your Harley, right?
Yeah.
Still ride your Harley, right? Thanks for being here, guys.
So let's see here, yeah. Maybe